Hey, thanks everybody for coming and sticking around. We can get you all fed really soon. I'd love to get kick-started here with a quick 30 seconds about each of you and what you're working on at your respective org so we can sort of level set context here. So, Biser, why don't you get us started?
Thank you. Hi, everyone. My name is Biser Dimitrov. I am responsible for digital asset technology in Citi. Our group develops a platform that is strategic for Citibank, so sits across all different business lines, and we are responsible for all the commercial and business use cases that involve blockchain and digital assets. Separately, I'm responsible for the DOT Center of Excellence, which is a group that evaluates how best a bank the size of Citi would adopt emerging technology like blockchain and digital assets. So evaluates standards, best practices, thinks about what's next, how to think about all the new things that are coming from the innovation space outside, and how we can take it with us and adopt and make sure it follows our best practices and technology standards.
Hey folks, Joe Medioli. I head up the financial institutions group at Anchorage Digital. That group, as the name suggests, really covers and focuses on our traditionally structured clients, asset managers, wealth managers, and the very broad array of active crypto markets participants. So think buy-side trading firms, sell-side OTC desks, and market makers, exchange venues. Anchorage Digital, for those that don't know, is a global, institutionally only focused digital assets platform. We provide custody, staking, governance, and trading services. And we are also home to Anchorage Digital Bank NA, which is a federally chartered trust bank in the US, also with regulated operations under the Monetary Authority of Singapore, and most recently, New York BIT license for trading services.
Hi, everybody. I'm Tom Sullivan. I lead business development for digital assets here at Societe Generale in New York. Primarily, that's in support of SG Forge, which is the digital asset subsidiary of SocGen, where we do a bunch of cool stuff that most banks can't do. Sorry, guys. And my side hustle is actually I manage our strategic investment portfolio, so I do our investments in fintechs, et cetera. So glad to be here.
Abhay, Navale. I head the engineering group for digital assets at Bank of New York. And, Bank of New York is across the board from a trade lifecycle, does all different activities. We are a big player in the market infrastructure. So on the digital asset side, we are essentially reimagining all those traditional lifecycle events and processes and, thinking about how would that look like in digital assets. Awesome.
Well, it's great level setting. Let's keep it spicy here. I mean, everybody is working. It's been a pretty crazy week, obviously. A lot of things have been happening.
What do you mean?
Yeah, things have been happening in the US here. Today's talk is about interoperability. We have 4 organizations here that are leading the way in the space. How do you all actually think about interoperability? Now, this is the most loaded question of all because you all have to play nicely. You all have your competitive advantages and disadvantages, right? Look, in traditional cyber, we have standards. We have, for example, if you find a critical vulnerability, you have the CVSS score. Halborn's been working on, for example, our BVSS score, but there's no official standards for a lot of the things going on in the digital asset space just yet. Obviously, you have Mika and Dora and things that are starting to happen here, but how are you all considering playing nicely with one another and interoperating with one another? So I'll leave it to anyone to get started. Yeah.
I can start, and it's amazing to have fellow panelists that we know from the space, from the industry, and sometimes when we make a joke, there it's all received well. So I don't want the audience to have the wrong impression. So first, from our perspective, interoperability, just to level set, means us being interoperable within our own technology, because we're introducing a new stack which may or may not play nicely with our TradFi tech. And in TradFi, there is a lot of red tape, and we need to make sure that it follows the path, the pipelines and everything for us to safely deploy, but also manage to in commercial use cases. So that's one angle. And then you have the angle of interoperability between systems, between blockchain protocols. I think that's maybe the more interesting part for the audience. And one way, I can just mention it out there because it's in the public space, that we think together and we play in the same sandboxes. There is industry initiatives like Global Layer 1, like Guardian Hosted Network, where the size of banks like Societe Generale and Bank of New York Mellon, we all play together and we share thinking of how the standards should be implemented, what is the best approach. So there's multiple layers of how we play within the space. First, internally, of making sure that everything works and it's all interoperable. There is a finality, there is atomicity of transactions, there's confirmation of our payments because we process huge volumes of payments per day, but also externally between us. And there is frameworks that allow for these initiatives to flourish, I would say.
Yeah, I mean, one off-script topic would be, Joe and we were just discussing, Joe, Anchorage and Bank of New York are working together on some of the ETF products. And the interoperability example was, you have APIs, we have SFTP. Right? But yeah, I've been kidding aside, if you think about Bank of New York or other large institutions, a lot of our clients are just starting to increase their exposure to this asset class. So for a lot of them, it's like, how can I get a unified experience? I already go to a certain portal, I give instruction, how can I get exposure to digital asset-related capabilities through the same interface? I get a tax report, I get an end-of-day report, how can that report be enhanced? So I think that's one way to look at interoperability, which is where do your clients currently interact with you, what are the touch points, and giving them a unified experience. So that's kind of like the off-chain example.
Yeah, I mean, I think that's a really important point because, when SG Forge went about, this embarked on this journey, it was really public permissionless chains, as a strong bias towards that. But understanding that financial institutions have not been able to do it or not, don't have the infrastructure to, don't have the ability to do certain things, and they rely on, their other trusted parties and relationships that they have, and we need to be able to to work together in that regard. So the first and easiest way to do it is to be the first person to put the card down on the bar and have some drinks, get together and kind of figure out where we fit in the space. But I totally agree. I think that we all need to be able to bring our clients along to the journey, and since we have each have our own roles, we figure out where we fit and we move forward in that way.
Yeah, I think along those lines, and it's kind of a interesting, when you think about even this panel, like we're an 8-year-old federal bank, right? We're the new kid on the block here, and so when we think about interoperability, it really is almost from the opposite lens, right? We came as a security company first, right? We built Anchorage around, this really unique security infrastructure, and then we built a bank on top of that. And so yes, we had this like incredible technology, but you're right, it didn't work out of the box with everybody's existing systems. And so one of the ways that we've thought about interoperability is actually our approach to regulatory compliance just in general, right? For years, and this is actively in flight right now, as we all know. We were the only crypto-native federal bank, right? We were the only ones subject to the same standards that other folks on this panel were, and we had to build a lot. We had to build an entirely new infrastructure to support travel rule compliance, right? Really basic blocking and tackling so that we can get to a space where we can interact with asset managers, we can support wealth managers, we can serve as a qualified custodian for this asset class. So that interoperability focus has actually been about sort of merging what we can do on this sort of technology side and provide interaction around these digital assets, but into the existing ecosystem. And as a custodian, right, we take a client-driven approach to asset support. So, from the sort of Layer 1 side of things, we take all comers. It's a big part of our business, but what we really want to be able to do is allow our clients to use those assets, transact in those assets. And that's a really big function of that, is merging into your existing operations.
Yeah, I mean, you mentioned you're 8 years old, which is congratulations, and you say as in crypto years, however many that is. I mean, our combined institutions are 400 years old combined, and the reality is that we want to survive, to mine 161, yours to 241, right? And so in order to do that, we need to be able to work together and interoperate, just straight up.
Yeah. Yeah, I mean, to speak further on that, just to be able to continue to, thrive more than survive. I mean, what are some of the lessons that you've all learned so far? I mean, like there's been, I feel like the entire industry is experiencing vertigo right now. Like it was all this way, and then just the pendulum just swung so fast, so hard, and here we are. So what lessons have you really learned when it comes to, again, like being able to work with others, building out standards? And I am gonna obviously get us into the where are things going from now, but like what have you learned over the past couple of years here in your orgs? I mean, you've all been with your orgs for a while now, so. Yeah.
Maybe I'll kick that off. Friction. Friction is really the biggest piece. And when we, again, we're an institutional-only platform. We're very focused on segregated wallet infrastructure. And, that introduces a huge amount of security, even with the sort of unique low-latency service that we provide. But it adds friction, right? It's different than what people are used to. And so a lot of our focus and a lot of the adoption that we've gotten specifically with my client base, like the regulated FIs out there, has been around building products and services that reduce that friction. And that has been one of the main drivers. So, as an example, like last year we launched this service called Atlas, which is really focused on intra-network or intra-Anchorage transaction flow and settlements, right? That's been a huge internal accelerator. It's been beneficial to our clients. It's removed counterparty risk from their transactions. It's also reduced operational risk for their ops teams. That's been a huge piece of it. So just making things easier while still preserving the sort of security and regulatory compliance infrastructure has been a huge boon for us. And it's something that it's a lesson we have to keep relearning and reteaching ourselves. Take friction out. That's how we get adoption. That's how we make this asset class usable.
Yeah, I mean, I'll give an example of how the traditional and digital worlds look at each other. You're talking about travel rule. In the traditional world, it just happens. Nobody even cares how it happens. But anybody who's worked on crypto and has tried to get travel rules set up, it's a lot of effort, a lot of pain points. So that's an example where the traditional world looks at like, this should be simple. It should just happen. Like, why are you guys struggling with it? And the other story is when the digital looks at the traditional world in terms of settlement hours and why you're not 24/7, like we can just do it. So those are kind of interesting examples of friction, but I think those are also interesting examples to learn from, right? And when it comes to standards and framework, there's a lot already invested in standards. If it's ISO standards for a lot of the settlements and payments, I think it's an important opportunity to look at those standards and how can they be enhanced to support digital asset. That's going to save a lot of time, and it's actually going to accelerate all of us to get where we all want to get, a faster, cheaper, better world.
Yeah, I mean, the simplest answer to your question, I think, is hire good lawyers. But the non-cheeky answer is that, and talking about standards, I think that, SG Forge has developed what's known as a CAST framework, which is token standards for securities tokens. And it was designed and built to be open source and, to be able to be used by the community. But one of the things that we've learned is that in order to, to build adoption, it still can't be ours. So we're looking for ways for that to be, not SG Forge, but out in the, owned elsewhere. And there will be more to come, I think, in the near future on that. And that goes hand in hand with the types of the existing standards that you have. Because when you talk about interoperability, you're not just talking about, well, how do we interact blockchain to blockchain, network to network, but how do we interact when you have institutions or when you have money that's in a traditional way, and how do you interoperate that way? And that's what these standards, one of the things that these standards do.
Something to add on that. One of the biggest lessons that I've seen in the last few years played out from a bank perspective, seeing how the blockchain world moves and how fast it is to be slow by design. So you pass all the FOMO and all the YOLO that you see and the different permutations and nuances of different protocols, and see what matures and how it matures, how it gets adopted. That's one of the biggest lessons. I remember being in the space since 2015, how many different protocols, different ideas came around, and different, all coming from a very legit teams, and just never happened to materialize, which eventually happened in the last few years and that's the topic of interoperability. That's why it's very important, because what we saw in the public permissionless space, there was explosion of layer 2s, roll-ups, different flavors, different clients, different protocols, settlement ledgers and whatnot. So from a bank perspective, we have to take a step back and figure out, A, what is the real client demand? Obviously, there is public data and block explorers that tell a story, but having the grown-ups in the room to assess, is that the real trading volume? Is that the real trading activity? Is that legit? So is there sufficient client demand to go to a specific protocol? And essentially what I saw happening in the last few years is with all these flavors of different protocols and ledgers, it just creates more friction. And what Joe was saying is just creates more open questions than answers. So we need to take a step back and assess what matures, how it matures. Can we make it business as usual? That's the bottom line. Can we drive revenue, sustainable revenues? So it's the topic of standards. How do we all combine and leveraging existing standards that we have, like ISO? It's a great example. We already have it. We need to maybe enhance it or translate the instructions to be blockchain instructions. So I think we have all the picks and shovels. What we need to is maturity and focus on risk management and compliance. This would make the space definitely more compatible with large banks' scope.
Now that we're talking about sort of the future and thriving and being able to really sort of outpace, the new kids on the block, so to say. I mean, how do you all manage sort of attempting to move? I mean, your point was to move slow as a feature, not as a bug, right? And that's what's needed. So how do you balance that with the rapid innovation? So it's there's yes, standards are coming. Folks at Halborn are actually part of the ISO working group focused on digital standards now. There's upcoming standardizations coming out. How do you balance actually, generating the features needed that your customers are asking for in the digital asset space with, hey, there isn't necessarily a standard for it right now? So how are you all managing, your boss's expectations with how you how fast you can move?
Yeah, I mean, on the engineering side, three things have worked well for us. One is more inward-looking. Every quarter, our engineering team does an innovation sprint, so it's like an internal hackathon. Recently they worked on ZK knowledge proofs or optimizing smart contract transactions. So one is inward-looking and giving your engineers that opportunity in the Agile framework to do those. Second is a lot of industry collaboration and partnership. I see Mustafa here. We've been working with Goldman on some projects, and that's really where we are bringing some of the brains together to solve a problem at a bigger scale. And third is, the digital asset space has a lot of all these industry hackathons and challenges happening, innovation tournament. Our teams have been active on that. They've done Chainlink hackathons, won prizes there. Swift, which is the traditional institution, they also do a lot of hackathons on digital assets, so we participate in those. So yeah, I think those three gave us enough opportunity, internal proof points, as well as external visibility to what we are doing and learning from it.
Very cool. Very cool.
I mean, my answer to your question is it's really hard.
Yeah.
The amount of activity, going back to end of last year, right, in the lead up to the, first launch of the ETFs has just skyrocketed. And so, when we think about that type of prioritization internally, it's a balance between a lot of different factors. I mean, keeping in mind that we're, a pre-IPO startup still. Right, so how do we balance? We'll call it like the continued inflorescence of new protocols, layer ones, working with the money on the table, with the VCs and their foundations and their investors, with those sort of longer-term investments is a really interesting question. One of the sort of joys I get out of running the FIG team here is we get to sound like geniuses by replicating things in TradFi from 30 years ago. And so one of the ways I get my team to focus is when the next person comes in and we have an inbound call about this thing they want to tokenize, if they don't have a good answer as to why, then let's maybe deprioritize that one and focus on, what is the use case we're actually trying to solve? Are we actually providing a value-added service that is going to make this individual's company, business work and be monetizable? It's a hard answer. It's a hard question to answer. But when we think about that in terms of product roadmap, it is we look to TradFi for a lot of these things, not necessarily to mimic it, but to mimic the standards, mimic the expectations, mimic the experience. Right? Technology evolves, the principles don't really.
Cool.
From our perspective, I think it's staying close to industry-leading startups, learning from the best. Because, as I mentioned, we are designed to be followers in adoption of specific technologies, just because of also the time to mature specific product or technology. But being close, working with funds, incubators, and external startup ecosystem where we see the tip of the spear of innovation. So taking those warnings and participating in industry initiatives with companies that are faster and more agile to adopt technology, getting those warnings, participating in sandboxes is something that is teaching us where is the puck is going. On the other side, we have our clients and our customers of demanding specific efforts. So we're taking those warnings from the industry that we participate, and we are adopting it inside. To Joe's point, it's tricky how you balance, because you don't want to be too passive and too slow on adopting something, but also you don't want to be the first one because of the scale of money, the type of clients that we have. So you can't risk, and there's reputational risk, technology risk, and everything around that. So it's a balance of being on the forefront, working with startups, ecosystems, sandboxes, but also making sure that technology matures in a reliable pathway within the bank.
Yeah, just to touch upon the partnership with the ecosystem, fintech, and startup. And we had a Halborn event, so it's worth mentioning. What I encourage my team and partners to is don't think about just as a contract, right? And Halborn and we've been working, Rob, Steve, we've been working on things, and we were like, okay, in addition to the contractual things, what can we do where we can learn from each other? And Steve and the Halborn team are going to be on site at our location on Monday for a full day of training and workshop. So I think seeking those kind of opportunities where you're not just thinking contractual, but really collaborating at any possible opportunities is a good way to innovate.
I mean, continuous learning is a core tenet over at Halborn, and so it's just, your answer was just really enlightening around just, okay, how do you continue to thrive? Well, just continue to educate your technical team and your business team on the latest and greatest, get them to collaborate, get them to do hackathons, and it's incredible what happens from that, so it makes total sense. I think time's about up, so let's go ahead and wrap it up, and let's go eat some lunch, and thank you all for listening. So thank everybody.
Thanks, everybody.
Panelists. Yep. Thank you.